Hey, welcome back into our video series on controlling and paying less in taxes in retirement with Roth strategies. I am Peter Richon, founder, advisor at Richon Planning, your local Dave Ramsey SmartVestor Pro, and independent fiduciary financial investment and retirement planner. Host of Planning Matters Radio, author of Understanding Your Investment Options, and let's continue our discussion about controlling your taxes, paying less in tax in retirement. On our last video, we talked about some important assumptions that we are making in planning, whether we assume taxes are going to go up or down into the future, or maybe just stay the same. That really determines what classification we want to put on our money and whether we want to pay taxes now or choose to defer them and pay them down the road. Now, disclaimer, I do not know, and nobody you talk to knows what the future of taxation looks like in this country. But many that I talk to are concerned about what the future of taxation looks like. They're carefully examining their assumptions, and they're taking some proactive steps to control their taxes today. Here are the facts. The IRS has a tax plan for each and every dollar that you've ever earned, that you've ever spent, that you ever saved for your financial future. The IRS has not forgotten about those retirement dollars in those tax deferred accounts. And a lot of people actually forget about that. They think that that tax savings that they realized when they were working and earning that money is a permanent tax savings. It's tax deferral. You're just kicking that can down the road. The IRS did not forget, and they never will. Sooner or later, those taxes are due. And the government has say-so on when they are due and how much is due on them. And they can change those rules at any point in time. In fact, January 1st, of 2020. They actually gave us a little bit of a reprieve on one end. With the passing of the Secure Act, they said, you're not required to take money out of those retirement accounts at 70 and a half anymore. We'll delay that another year and a half until you're 72. Now that's when they start to require you take money out of those accounts and pay your taxes. But where they give something on one hand, they often take something away on the other. And what they did is said, well, when you die and you pass that tax deferred account on to beneficiaries, instead of being able to stretch that tax deferral over their lifetime and the lifetime of their children, now they have to pay that tax. They have to liquidate that account within 10 years. That's going to push a lot of people into a much higher tax environment. So likely they'll collect more in the long run for that year and a half extra delay they gave retirees in not mandating the RMD's required minimum distributions until 72. We are historically in a very low tax environment. Low looking back into our past, and most likely low looking into our future. Now, again, I don't know for certain, but debt, deficit, and spending today equals taxation into the future. And we've certainly got a lot of those things. Taxes are a compulsory purchase. You must pay them at some point in time because, again, the IRS has a plan on how to collect with each and every dollar. So a little story, an analogy, if you will, here. You walk into a department store, you see two racks. One's got the sale sign on it, 25% off. The other is full price. You see something you like. In fact, you see two of them. You see one of the exact same item on each one of those racks. You carefully examine it. They are exactly the same. You ask the sales associate, hey, is there a mistake here? Why is one on the sales rack and one on the full price rack? The sales associate says, hey, I don't know, but that is correct. That is the right pricing. Which one do you buy? The one that's 25% off or the one that's full price? I would buy the one that's 25% off. Again, when you walk into a department store, you see those items, you probably don't have to buy them. With taxes, sooner or later, you have to pay them. They are a compulsory purchase. So why not buy your taxes when they're on sale? To recap, tax laws, tax brackets, tax rates, those things can change. They can pass laws and change them when they want to. We know what they are today, and depending on your feelings and your assumptions of what they might look like into the future, you may want to take advantage of the opportunity that you have today to get more of your money into these tax-free accounts and Roths, Roth IRAs or Roth 401ks. We know what taxes are today. We can buy out of them at today's rates. We can run a report for you at Richon Planning showing you in black and white and red exactly what your tax bill looks like on your tax deferred account throughout retirement versus if you did some proactive planning and wanted to look at considering some Roth IRA contribution or conversion strategies. We can show you what that difference looks like if you default to the IRS's current plan or if you're proactive with your own. And just a news flash, most of the time, defaulting to the IRS's plan is not in your best interest. So I encourage you to take a look. Give us a call at Richon Planning, 919-300-5886, 919-300-5886. Go online, richonplanning.com. It looks like richonplanning.com. There's a little button right at the top of the site, or probably somewhere around this video, for you to schedule a time for a discussion and an in-person or virtual review where we can show you those numbers in black and white and red. Definitely worth taking a look at. Stay tuned. We're going to talk more about this topic and how you can take advantage on our next video. So be sure to check it out and learn more about how to pay less in taxes.